Welcome, everyone. Thanks for joining in. Let me just do a quick round of introductions of all the speakers and my co host so that we can take this forward. So, welcome, Ravi, Shavan, and KC. Brilliant to have you guys here. Ravi and Shavan have been on my podcast, the 1% Project, and obviously they are real, I would say, product management experts, gurus. Ravi was the ex product officer for Tinder, has led products for Facebook, Xbox, and now he's an entrepreneur. And before that, he was at EIR at Reforge. Shaman, probably a lot of people know him as well, is with Byju's. He's most famously known as the Swagwala PM, and he will talk about it more as we go through it. And hi, Casey. And he is basically somebody who is an expert on negotiation, is with an Inmobi and used to, and still writes a very in-depth blog. And I have Jitha, who's the co-host, along with me. Over to you.
Hey, thanks, Pritish. I'm an operator. I work early stage and now in retail and invest as an angel as well. So I'm super excited to have this conversation about a topic that's actually been quite important and interesting over the last couple of years because as the pandemic hit, I've seen a lot of companies that I used to work with in my portfolio, for example, and that my friends are investing in or working in. We've seen a bunch of different kinds of outcomes. Some companies have died, couldn't make it. Some have made it through, but are a pale shadow of themselves. And some have thrived through this period of volatility. So it's very interesting to understand, to go under the hood and say, okay, what makes these companies stick? So I'm really excited to have this conversation. And maybe let's start, Ravi, with you've written an article about this topic, building anti-fragile companies. And you started that with a sort of analogy to explain what fragile or anti-fragile, etc., mean using some interesting metaphors. So could you start with that? I think it's good for all of us to have a common understanding of what we really mean when we say anti-fragile. Is it just a buzzword or what does it mean?
Yeah, definitely. I can talk through that. I think for a lot of people, when they hear the term anti-fragile, they tend to conflate it with the idea of resilience, thinking that an anti-fragile company is one which, when they're stressed, the company is able to overcome the stress. But there's actually a step beyond that. We all understand fragility is, under stress, something breaks, and it breaks to the point where it's irrevocable. It's just in pieces and you can't put it back together. Resilience is something in between. It's a matter of when there's stress, the company or the person or the entity is able to bounce back. Anti-fragile is really the opposite of fragility. It's beyond resilience or robustness. It's the idea that when there's stress on someone, when there's stress on something, it actually gets stronger rather than breaks into irrevocable pieces. And the analogy that I use in the article is we can think of a few different materials. Glass is something that's fragile. Up to a certain amount of point, it can take stress. If you tap it with a hammer, the glass isn't going to break. But if you hit it hard enough, the glass is going to shatter and you're not going to be able to put it back together. Rubber is a material that's resilient. You hit rubber with a hammer, you keep hitting it harder and harder, and it is going to be able to withstand those blows and push them back. But the analogy of something that's anti-fragile is actually muscle. So when you work out muscle, the muscle tears, it breaks, and then when it grows back, it actually grows back stronger. And the companies that I talk about within the article have that level of anti-fragility where the pandemic wasn't something they just withstood. It was actually something that made them stronger. And we can see that with companies like, Disney in some ways, Amazon in some ways, Roblox in some ways, Trader Joe's, which we'll get into in some ways. And so that's a really important, I think, baseline to set in terms of how to think about anti-fragile as not just being resilient, but being the opposite of fragility.
Got it. And why would you say Roblox, for instance, is anti-fragile?
Yeah, I think one of the things that's interesting about Roblox is you look at it and it can seem like a trivial game with bad graphics, but the thing that Roblox has done is they've built a really robust system by which creators can create content for the rest of the audience. And this system is powerful enough, but simple enough that the game creators are not professional game developers. They're actually people that are 13, 14, 15, 16, who are able to understand the types of games that their little brother or little sister want to play. And so when the pandemic happened and schools started to close down. I've got two daughters of my own. I've got a 10-year-old and a 12-year-old. The thing that they did was they went on to Roblox. That really replaced the playground, and the entire school, 300 kids from their school, were on Roblox playing in variously sized groups, some playing solo, some playing in groups of 2, some in groups of 10. And that activity on Roblox was enough energy, enough activity to actually create more incentive for the people who are creating games. And so there was an influx of new game content, really relevant game content that was created after the pandemic for Roblox. Earnings for creators went up. And so that stress on the Roblox system actually made Roblox stronger by pulling more creators into the system, creating more earnings, getting more people to play, getting more people to socialize. And it's a classic example of how, when you think about how you build out your system and you do it in a certain way, you can build it out in a certain way where it's the opposite of fragile, actually gets stronger when you face those impacts.
Got it. I think that's a fascinating example, and maybe we'll get into other user-generated content type platforms. But this is a great example. So when Taleb wrote Antifragile, the book, and he probably coined the term then, one of the things he said is, I want to be happy in a world I don't understand. That to me sums it up well, that I don't want to bother about predicting the future. I want to be able to win no matter what future comes tomorrow. And in fact, if you're fragile, you actually have to predict the future. You have to see, okay, what might happen and how can I protect myself? How can I become resilient? But a player like Roblox, right? Like you said, regardless of what happens, regardless of what is the zeitgeist in terms of different kinds of things that people might want to play, they'll start seeing that happen. They created a platform with some of those characteristics, which Ravi will get into in a bit. Before that, I just want to move to KC. So KC, you've been in the mobile ad space for a long time, and there have been many shocks. Like even before COVID, there were browsers with ad blockers installed by default. A few months ago, Apple's change in policy brought even Meta's or Facebook stock down. So there have been a lot of shocks to the mobile ad space or to the ad space, digital ad space in general. So would love to hear your perspective on this. Are there any anti-fragile or even resilient ad companies, and what makes you anti-fragile in this space?
Hey, thanks for that, Jitha. So I think a couple different things, right? One is I'm going to ride on top of what Ravi's saying. The important factor to manage with fragility is the unknown box, right? And that 2x2 between knowns and unknowns. And so I think that is the area which Taleb's talking about in his books too. And that is the area generally companies fall prey, that's completely unknown sideways threats that tend to either sideline companies, make somebody else the primary way of consumption. And that's a bunch of those examples that Ravi talked about are all falling into that bucket, that they were not seen as a traditional threat, but they came out of nowhere. And some companies were able to cope with that. I do think that it comes down to a couple of things. One is actually what I broadly want to call decentralization, not in the same sense as the cryptocurrency ecosystem uses it, but more in terms of how an ecosystem or a company makes decisions within its ecosystem, right? Let me dive into ad tech for just a moment. And it's probably true outside of ad tech too, but ad tech, especially the independent side of ad tech, is very decentralized. There are thousands of publishers that form the supply side, and there are thousands of advertisers that form the demand side, right? And ultimately, most ad tech companies are some form of a marketplace. Some are more tilted towards supply, some more towards demand. Some are just pure neutral marketplaces, all shapes and sizes. But the reality is, what it comes down to is that any shocks to the system are going to hit a few, not every single one across the spectrum, number one. And number two, if they are hitting every single one across the spectrum, you have hundreds of thousands of people solving problems, micro problems, basically, to resolve said situation. So the iOS changes, for example, iOS said, hey, no user ID, don't track users across applications, privacy is important. That's a sea change for the industry. But the reality is it impacts hundreds of thousands of advertisers and hundreds of thousands of publishers, right? The App Store itself has, at last count, I think, close to 1 million developers publishing apps, right? If it's going to touch all of them, they're all going to try to solve the problem. And what emerged ultimately is some kind of equilibrium, right? There were 5-6 different ways to solve some of these problems. And ultimately, the industry came up with a bunch of solutions that would work broadly for all. even if they were not inch perfect compared to prior ecosystem or prior universe. And so I think that, anyway, the summary of that is I do think that a decentralized problem solving or decision making mechanism, basically a kind of system where the tentacles are solving problems and not a centralized brain, is a very important factor within this. And to throw it back to Ravi's points, I think he's calling that diversification to some extent. And he's also calling it people first in his article. He's saying companies that are people first, that rely on the anti-fragile behavior of people and flexibility that people display versus systems, that's what companies are depending on. I would actually say those 2 points are probably one, and they amalgamate into this decentralized decision-making kind of system. And that is where shocks are going to be visible as micro shocks in some corner, and they will get solved before they become systemic shocks. And that is very typical both in financial markets and ad tech. These are very large, real-time, extremely liquid on demand side and supply side type markets. The contrast to that is something like Uber and Uber or Lyft in Ravi's article, where there's centralized brain. There's a specific type of system that is applied not only centrally in North America, but actually worldwide. There's a certain type of execution, playbook they follow, and it does not lend itself to the same level of flexibility as say, a much more decentralized way to do the same thing. I think that's where largely all of this falls into place. I do see this as a problem of decentralized problem solving, or a situation of decentralized problem solving. And the only companies that are able to do that are those that have this type of very decentralized presence and decision making.
Got it.
One thing I would add to that is I think decentralization is really important, and a critical factor there is that you have a decentralized force that's empowered and can adapt. As soon as you start to take away the ability to have that decentralized network actually adapt, then you lose the ability to be anti-fragile. I think that's what happened with Uber and Lyft was they have a decentralized workforce, but that workforce couldn't adapt. The platform required them to act in a really commoditized way, which means one piece breaks, they all break. But if you have a decentralized platform where the people on the platform are empowered, like in the case of Roblox, or in the case of Amazon sellers, or in the case of Airbnb hosts, then that decentralized system can adapt in really rapid ways, in unexpected ways, and then make the overall company more anti-fragile.
100%. And just last point, maybe agreeing with Ravi on one level deeper is, out of 100 companies in ad tech or any kind of ecosystem, you're going to have a bunch of them fail because they can't decentralize fast enough. They can't react quickly to small shocks before they become huge. They don't have an empowered, decentralized decision-making force and all of that. But the 20 or 30 companies out of that 100 that fail, or let's say 80 that fail, are going to teach the rest 20 how to do it. And I think that's I guess, next layer of anti-fragility for an industry as a whole. So look at the survivors of any industry, and this is what you'll find, right? Which is literally the point Ravi's trying to make too.
Yeah. Now, I'm going to bookmark this point on decentralized decision making and empowering people to come back to later. I think the additional nuance to that, like you said, Casey, at an industry level, it's that you watch the other players as well. So it's almost, there's decentralized decision making, yes, but it's also wisdom of the crowd. Who comes up with something that helps you survive this shock, and then everyone can adapt accordingly. So we'll come back to that. But before that, Shravan, I want to come to you. You worked in the education space for a while and especially over the last couple of years, you've seen a lot happening. You have a strong product management community, and you're seeing how product managers have been innovating in different companies through this period. What are you seeing as some patterns?
Yeah, I think first of all, I completely echo with the points that Ravi and Srini was making, but I would just speak from a system standpoint. I think what has happened over the last 50 odd years is that earlier there used to be hard systems with certain level of fundamental principles on which specifically making changes were very hard, right? Like, for example, an institution like Harvard or Stanford, or I'm specifically talking from an education standpoint. As you scale from a system from 100 users to 1,000 or to 10,000, it becomes very hard to change that system. And what happens is, if that mindset, because the audience is rapidly evolving, right? Every person has their own use case of getting educated. Some people want to get motivated. Some people specifically want to learn a particular craft, right? It doesn't cater to all the use cases. And most hard systems eventually end up making very poor feedback loops, which is like very relevant for any system to scale and become anti-fragile over time. And that happened. It's a counter analogy that as you are scaling, those feedback loops become weaker over time, and that becomes the point of breakage for any system. But what has happened over the last like 10 or 20 years with the internet coming in, and you see multiple education products coming in, these are agile systems. Changes can be made very fast. But these agile systems also do have their own principles. So I completely believe that empowering people and giving them autonomy, but it comes from one fundamental mindset, that are they completely aligned to the large problem that they're going to solve. I'll give you a very interesting example. So when specifically I started my own CBC, the first mindset was that are people willing to pay a premium for a course which teaches them product management, because there are so many alternatives available in the market? Now, the core thesis of this was that if you functionally create a very strong network in which people can relate to you, they feel they're accessible, you as a creator are hustling to understand what the needs of the users are. And over the last 5,000-6,000 conversations that I've done over the last 1 year, I started believing that there is a very functional kind of a mindset to an educator or versus a creator. A creator might have distribution. You might have 30,000 followers or 40,000 followers, and people believe that you generate a certain kind of content. But that doesn't necessarily translate to you scaling a model in which you can impact lives, right? For an educator, it really becomes very important to create something like emotional distribution, that people can connect to you. They start believing that this is a person I can trust. And there is a layer of trust that gets building in that ecosystem. So initially, even while you're doing things which don't scale, it brings that kind of hustle into people, right? That kind of structure into people, that they understand the nuances of the system and the core principles of the system on which the system should stand on. And that has to decentralize to any creator who is coming into the education space, because most of the, like, I was, yeah, hello? Sorry? Was someone speak? Yeah, sorry. Yeah. So at most places, what people thought that I am a very strong believer of the Gurukul model, that education has to be done in such a way that in closed curated groups where there is a lot of personal connect with the instructor. But the hard problem is whenever people see it from a macro level, they think it's a non-scalable model. It doesn't happen. Initially, it isn't, but it is needed specifically for any kind of person to translate into the dynamic of an educator and learn things from there. That what really makes you an educator is access really important, is compassion really important, is humility very important, is encouragement very important, which are not product metrics which you typically track on a dashboard. And if those kind of metrics eventually, slowly and steadily, you start building layers on top of it and disseminate that mindset in people, plus the kind of product layers that you build, then you build a very antifragile network. And then that is where you can functionally scale, because it's not just the digital product that you're making, it's also the kind of people that you're adding to the network. And that network in totality becomes like a common brain, but it's functionally decentralized in such a way that everybody's thinking on the same lines, and it becomes constructive criticism at all the points. So any fight, any criticism that's happening within the system is to improve the system. And that is something that I've very at the core of my heart, that I functionally believe that this is how you build anti-fragile networks. And if that is the definition that Ravi was also calling out to a certain level. Yeah.
Got it.
I want to add an interesting example to that. So I completely agree with this, especially in the education model. When COVID started, we had recently moved. So we'd moved school districts a few months earlier. And so we were connected to essentially two different school districts, one of which was a public school district, which had a lot of rules. And in the months after COVID, the teachers really struggled to figure out what to do. They were sending homework home. They weren't doing a lot on Zoom. They were trying to figure out how to create a remote learning experience within a set of rules that weren't designed for a remote learning experience. And because they were, a policy-driven public school system, they didn't have the opportunity to innovate outside of those rules. The new school that we were in was a private school. They could do whatever they needed to do to educate the kids. And within days after the lockdown, they got on Zoom. A lot of these, we're in Hollywood, so a lot of different teachers have costumes. They were dressing up in costumes. They were doing fireside chats. They were doing games and skits. Some of the teachers were treating it like a YouTube channel and asking the students to subscribe. And it was this fun thing where the kids felt like, I'm now learning through a YouTube channel. And it felt like the sort of time that they were spending out of school was now what they were doing in school, where it was like YouTube and TikTok. And that difference between really tapping into the creativity of people and empowering people and enabling an educator to be an educator, irrespective of the policy, was the difference between a school that had a very fragile learning system and a school that had a very anti-fragile learning system. And the pace at which all of that happened was really surprising to me. The quality with which the difference in quality was really surprising to me as well.
Got it. Fascinating. I think so. From hearing both of you, I think the one thing, Ravi, about the schools that adapted versus the schools that didn't, of course, giving people the freedom to make decisions, yes, but the frequency of feedback or the level of experimentation, trying a lot of different things, throwing them on the wall, see what sticks, that seems to be very next level. So, Shravan, like you said, a feedback loop in an organization can get hard and then hard to change. But then when the feedback's coming quickly, you're also adapting much faster. In a sense, you have a lot more capacity to figure out what will work and what won't work. And then you do more of what's working. So quite interesting. And I think it's almost a segue. So Ravi, in your article, you mentioned a few different patterns in anti-fragile companies. One of those was capacity is a lot more important than efficiency. And to me, what both of you said really speaks to that. But could you say a little more, Ravi, about what you mean by that when you say capacity more important than efficiency for anti-fragility?
Yep, absolutely. And I think this goes to some of Casey's points as well about thinking about anti-fragility in the context of ad networks. I think we live in a time, especially pre-pandemic, where companies were just obsessive about efficiency. And so the example that I use in the article is that there was an interesting case where Groupon had decided a few months before the pandemic to get rid of its e-commerce business and focus entirely on local. And the reason that they got rid of this e-commerce business that was growing was they felt that it wasn't really earning its keep. The amount of margin that they were getting for the amount of impressions on their website just wasn't where they wanted it to be. So they had this arbitrary metric that they were using to evaluate the business rather than thinking about the fundamentals of having a diversified business that offers both the ability to order things remotely as well as the ability to have local discounts. And so they shut down the business at exactly the wrong moment for the company when they needed that to survive, when their local business really got decimated by the pandemic. And that was a case where they were really optimizing for efficiency on their P&L and not thinking about having capacity and having diversity. And so the example that I use within the article is software engineers know that redundancy is really important to resilience. And what redundancy means is that you've got inefficiency in the system. You're actually over allocating capacity so that if something unexpected happens, you're able to deal with it. And interestingly, that's exactly what Zoom did pre-pandemic. They always had about 50% extra capacity on reserve so that if they had a spike in demand, they could react to it. It's one of the reasons that during the whole initial phases of the pandemic, they were able to meet all of that influx of new demand, while other much bigger companies like Facebook and Microsoft and others were not able to meet that demand and serve the need to have people communicate via video. And companies really optimize for efficiency. There's lots of incentives to do that. But in doing that, they actually create fragility because there's not a lot of slack in the system with which to be able to react to shocks as they come in. And having that extra capacity is really important to be able to absorb those shocks, to be able to have the runway to figure out what to do in light of those shocks, and to be able to move through those shocks so that it's better for the business in the long run.
And just adding to what Ravi is saying, I think I completely agree. I think what really happens is while you scale any system, there are certain variables which you start believing that is the core ethos of the system, but that really doesn't happen as more and more users get added to. So generally, there are two kinds of problems, like deterministic problem and non-deterministic problems. If I'm solving a problem at a very small scale of maybe like 20 users or 30 users, I might be able to fundamentally figure out that these are the four variables that eventually are very important to that user case. But typically, as you scale, the very same problem at a larger scale becomes very non-deterministic because there are so many variables which you are not even aware of. And you don't build that kind of capacity around you to accommodate those variables. And you keep drilling on the 4 or 5 variables which you earlier thought were the core ethos of the system. And eventually what happens is as more and more cohorts of users get added to that system, it becomes irrelevant or not usable for that part. So that is why what I completely believe that most of the problems in education, in products, or in decision making in human mankind are functionally resource allocation problems. There has to be fundamentally a small 20 to 30%. Like I'll give you a very simple example. While I was starting my own CBC, I saw a lot of people initially thought that CBC is just Shravan talking about a particular topic or some speakers coming in, some great speakers coming in, they're talking about a particular topic. But I functionally also started to realize that there's another part where people want one-on-one meetings, which is very hard to do in a system of like 100 people where I have to interact with other people. But I had to build capacity for that. And that brought a very stellar experience in terms of building that education system. And now we are trying to build a product layer on top of it, that how do you effectively better resource allocate for that particular variable, which basically came unaccounted for while we were building that system. Yeah.
Hey, so I want to maybe combine or just speak out a couple of points that Shravan and Ravi are making in combination just to validate if this is what they're saying too. I feel like it's a learning for me a little bit. I validate this. So there's two separate points here, right? One is an ethos point. We talked about decentralization. I think Ravi talked about how decentralized decision making, empowerment, and these kinds of things are become an important element of it. And I think Shravan added on that, hey, but everybody needs to have a single kind of meta goal that they're all going after, which is what actually then aligns this decentralized, decision making, let's say, system. I think all of that comes down to ethos and culture, right? To some extent, like is the goal aligned? Is there a culture in the organization that can actually allow for that? And is the goal lofty enough that a very large number of people at every unit level, basically all over the world, let's say in different functions, are able to align themselves in a very, very kind of cohesive manner? I think it just speaks to general leadership, in my opinion, and a lot of companies do a great job of this, but a lot don't as well. All right, there's a lot of great companies out there that every silo inside the company is behaving very differently. There is not like a cultural fabric that they've created. And so even though the company has lofty goals and many people, let's say close to the leadership, are able to align to that, there's this challenge of as you go further and further down to the nodal level, that alignment erodes. The only thing that can hold that together is conscious distribution of decision making ability along with a culture that ties everybody together. So that's one major point that I took away, just combining Ravi's point and Shravan's point. The second one seems to be this thing about safety factor. Now, I just think that this is a problem of the information era. All of the internet companies suffer from this mentality that just because we have a lot of data, we know everything. This is absolutely obviously not true. I think anybody logically would agree or actually would know that is not the case. But information and the depth of it and the amount of data especially can give us this all sense of security that, hey, we see all aspects of this and we understand all of this. But that is dangerous. Like, I think I was astounded to find out when I moved to the US that they built the Golden Gate Bridge in the 1930s or something. And that's an insane piece of technology for early 1900s, pre-mid-century even. And it's crazy. And the reason they were able to do that, I think, is that they had the safety factor mentality saying, hey, we don't really know what might happen down the line. So we're going to just put in a substantial amount of slack, also known as safety factor, that basically allows for things that we don't know and we probably won't know. And in that case, they had no choice. They didn't have the data. Now we have the data and we fall into our own trap saying, hey, we have so much data that we know everything. It's 100% not the case.
Yeah, got it. I think the other piece, right, from the safety factor point of view as well, right, very simple, is cash flows give you that anti-fragility to a certain extent, right? Having free cash flow. Amazon's a great example. When COVID hit and everyone was like, shucks, I have to PPE enable my entire supply chain. Amazon was like, why don't you all take a seat? Because I've been making, obviously as a profit percentage, it may be low, but the prodigious amounts of cash they generate, they could just go ahead and say, okay, I'm going to do it all and differentiate myself there. So cash flows give you anti-fragility. Reliance in India is another great example, right? Which is with the amount of cash they were generating, they could take their time. They could decide when they want to enter the mobile network industry. And then when 4G auctions were launched, they went all in and they disrupted and eclipsed to a large extent all of these players like Airtel and others who'd been building slowly 2G, 3G, and so on. So cash flows are a great thing that give you anti-fragility. Casey, but before we go, I had a question for you, but before we go in, I think we have our co-host Sakshi who joined a little while ago. Hey, Sakshi.
Hey guys, I'm sorry I'm a bit late, but love the conversation. I really don't want to intervene at all. Please keep it going. Please keep it going. I'll keep my questions for later.
Cool. All right. And for listeners, we forgot to say it earlier, but we will leave at least 10 minutes, maybe more at the end for any questions or inputs you want to share. So we do that. Casey, coming back to you, I want to dig on that capacity question a little bit more to see if there's something there. If I look at Inmobi, in the last few years, so of course, Inmobi has built an ad network, weathered the storms that came at you. But in the last few years, you created Glance, which just recently got raised at 200 million valuation or something. You started Roposo. So how is that? Did you see that capacity that was created in the company to take those bets as a question of people adapting, as a question of creating that space, creating that safety net? What enables a company like Inmobi to create these two large companies on the side?
Got it. So look, I think two parts to the answer. I think one, Inmobi as a culture, right from the top, it's a culture of enablement. We have incredibly smart people in the company, and we always have attracted the most ambitious and smart folks coming in. And one of the things that happens in companies that start hitting the flatter part of the growth curve, which happens to many companies in the first part of their business, and they have to reinvent and all that. One of the things that Inmobi has always done is when we start seeing the curve even begin to flatten, you're going to have some of the most important people who are the driving force of that business moving over to start new things. It does two things, right? There is never a situation where people are competing for a role in the company. There is always an element of, hey, okay, looks like there's an opportunity to grow something new here. Do you want to go ahead and do it? And what is the investment you need? And so I think that's just a cultural fabric, right? It's basically enablement. And it's basically to say, hey, we can't let this high growth company mentality or startup mentality ever go away, which basically means the moment there's an opportunity to start something new and put some momentum behind it and investment behind it, we will do. So that's one big part of it. The second big part of it is really something to do with what has been talking about, both in his blog post and on the space or the conversation. And that has a lot to do with this interlinked diversification type strategy. It's very easy to, especially when you are generating profits from your bread and butter business, it's very easy to go two ways. One way is, just depend on what's already working and refuse to innovate or change because it may hurt the existing business. That's a great example of those old, razor blade type businesses, right? Like that ultimately got killed by the iPhone. But yeah, there is that element, right? That a lot of companies have this inertia to say, hey, this makes a lot of money. It's a bread and butter. And we got to stick to that. And we can't have innovation happening on the side that may impact that negatively. We have a completely different mentality towards it. We think that the 100% of the revenue and the margins for the company, basically the bread and butter of the company, has to be earned by 70 to 80% of the people. And 20% of the people are always going to work at the frontier. This is really a hard line. There is no point in Mobi's past, and I've been there 11 years at this point. There's no point, and at no point in time in the last 11 years have we had a time where 100% of the company was simply working on the core business. It simply doesn't work. It creates a lack of this kind of frontier decision making, which is very essential for innovation, very essential for diversification, and very essential also to maintain a very high quality organization, right? Your best people ultimately will leave when they notice stagnation. But if there's the next startup they can build, they will continue to build and they will connect it back to what they know, which is the core business. And that's what Inmobi's always been doing. There are many invisible lines that connect Glance back to Inmobi, that connect Inmobi with Glance, Reforge, and Inmobi. We acquired a couple of the companies during the course of the last 5 years. All of them are connected to each other in this kind of very clean and well thought through manner that not only diversifies the business, but also, as again, repeat point, but also keeps the best people engaged and ambitious in building. And so I think Ravi focused on this element, the people element separately from diversification. But for a growth company, I think they're linked. You want to keep your best people. And the way to do that is start new companies, assign 20% of your time and investment into new things that people who really understand your core business are going to go and build. You can't really beat that. Honestly, you can't. Ultimately, the only weapon any company has is people. And they're going to go off to interesting pastures unless you keep doing this.
And Srini, very valid point. that point, I think I've always believed, right? That is something that I've seen in high growth companies, that the curation of the nodes, the people who come inside there are three functional factors which kind of make a lot of sense. The first thing is that, is the mindset completely aligned on creating impact? Is that something that truly drives them besides the wealth creation part or the value creation part of it? And then you don't dabble into their skill sets, because every person is unique, right? And if everybody is functionally aligned on creating a high impact network, whether it's a lofty goal of creating, redefining education or redefining finance, however you're looking at it, primarily it is all about how you enable people functionally within the system to come up with certain different logics. If they are functionally aligned in the large lofty goal, that it is not a single platform that you can think that it's a single layer that you're able to build. It's a combination of like intrinsically multiple layers on which how different people think, and they come up with different ideas and you enable them functionally. And simultaneously, the last part that I think, which is very important, which you talked about, that 80% of the profits eventually go to the the employees or the nodes, right? I think the wealth creation should be a byproduct, and everybody should functionally feel from their own nodal point of view that the impact that they're not generating is not just from a financial point of view, but also from a social point of view, which I've genuinely seen in people who are in high impact networks. So it makes a lot more sense that you dabble into the mindset and create a very curated layer of who gets in. But once they get in, you also give them a sense of large autonomy on what they eventually want to do. And autonomy in return brings accountability as a parallel part of it. Yeah.
Super. Sakshi, I think you had a question you wanted to come in on.
Yeah, thanks, guys. First of all, I think amazing points, and I'm getting to learn so much. Super grateful for that. I just had a quick question for Ravi, Shavan, and Casey. And I know I'm not a startup founder, but I know a lot of young startup founders around the age of, I think, some are 20, some are 21, even 19. And I think as these people are starting to build a company or a business, my question to the three of you is like, how do new startups optimize for anti-fragility? We discussed about the work culture. We discussed about how the sort of the founders ethos trickles down. So what are your like actionable steps that you would advise to them?
I think the first thing I would suggest is for founders, and this goes back to something Shravan was talking about at the beginning, founders should really think about the system that they're building first and foremost. And so let's imagine two founders want to start something within the game industry. One can decide, I want to build a game. I want to build the coolest game ever. The other can decide, I want to build a platform where I can enable creators to create really interesting entertainment content, and I can enable people to connect to each other and play that content. Just by default from the very seed stage, those strategies are very different in terms of their ability to create anti-fragility. The systems-based approach is going to be much more anti-fragile than the pure singular product-based approach. So I think the first thing is really a strategic question of how do you create a strategy and then start to build a strategy that ultimately enables you to become anti-fragile. And then I think the second piece is around culture, and both Casey and Shravan have talked a lot about this, is you want to build a culture where each of the people on the team are empowered, especially at that small stage. There's not a lot of capacity, right? Like you can't have 20% of people working on not the core business when there's only 10 or 20 people in the room. But what you can do is have each of them feel empowered to not only do their role, but go beyond their role, bring their best creativity, bring all of their capacity, all of their desire for impact to helping the business grow. And I think those two things of starting from the seed with the strategy that has anti-fragility built in, and the two, building a culture around empowerment, are both really key ways for founders in those very early days to start to create an anti-fragile enterprise.
And adding to Ravi's point, I think one more point, Sakshi, what I would like to add is that when you start something, the lofty goal is always there in your mind, but you should always be prepared to believe that you don't know what you don't know. And doing hustle at that point of time is absolutely relevant. And probably you might think that those are things which don't scale at a system layer. But doing hustle brings a large influx of ideas that is very hard to eventually get if you try to start thinking from an already pre-built system point of view and say that this has worked, this will work again. It doesn't work like that. And initially, while you're doing that hustle, it can take 18 hours from a human layer point of view, and you consistently keep doing it. But in retrospect, it gives you a lot of flexibility on delving into the people's mindset, the user's mindset on why that person wants to be on the platform or why that person has to be on the system. And then you prioritize those bets and start believing that, oh, this is something that I didn't know, but I need to build some sort of a layer on top of it, which enables most of the creators. And I know for a fact that I've interacted with so many creators. I know for a fact that this will make sense. And that's a logical hypothesis that you build across, right? So while you start building such a system from the very early on, and I'm not a very big fan of not building in public, the larger the feedback, and the larger the feedback coefficient, the larger the ingestion of values, then it becomes only a problem of prioritization. But if you have less ideas, like if 100 people give me a particular sense of an idea on how to particularly build a wisdom, then the wisdom lies with me that what I want to prioritize. But if I only have 5 people giving me that this is how a system needs to be built, then I'm letting go of the larger network of people who might think a different way or who might think the business might scale a different way. So I think that is something that's extremely important, that you keep that hustle and the owner's mindset very trickle down in the early stage of the company. And then you start building systems from a large set of feedback that you're consistently building, which typically comes from public. Yeah.
Another thing I'd add to that to build on it is there's a really big temptation, especially right now, given that there's so much capital coming into companies, to start to grow your team, to start to increase your spend, to really go at things with as much momentum as you possibly can. And one of the things that we've learned, so I'm just in the kind of seed stage of a new company. We're about 7 months in. And one of the things that we found is speed is much more about latency than it is velocity. The more we hit the accelerator, the faster we go, the harder it is to turn. We all know that from a car, right? You can't turn a car very quickly if it's going very fast. But if you're going slowly, if you're thinking iteratively, you can turn the car very quickly. And I had a conversation with one of our VCs a couple of months ago, and I very proudly said, we haven't dipped too much into our funding yet because it's been just a small team working really quickly and iteratively. And he was concerned. He's like, you've raised the money. You need to spend the money. And I went back and I started to think about, are we doing the right thing? Should we be accelerating? But at that time, we just didn't know enough. We didn't have enough confidence that if we accelerated in a direction, it would be the right direction. We didn't have enough of those data points that Shravan talked about. And so we said, look, we're going to continue to operate at the pace that we're comfortable with, because it gives us a lot of agility and we can learn very quickly. And then once we've learned enough that we have conviction, then we can start to put the accelerator in that direction and start to spend more and feel really good about it, that we're heading in the right direction.
So I'll just conclude. So I think Ravi and Shravan have gone pretty deep into this topic. I do think that ultimately the smallest startups or the new startups who are just beginning to build a business, they've just found product market fit or trying to figure it out, I don't actually believe they have the luxury of being anti-fragile by default. I just don't think they can decentralize decision-making too much. I don't believe they have enough people to solve problems in a deeply decentralized manner. They also don't have enough clients oftentimes or customers who will give them the feedback. And they definitely don't have the spare capacity, right, from a people's standpoint at least. So I actually don't believe that small startups basically are startups that are just in the early stages of their growth actually have the luxury of anti-fragility. But I will counter myself by saying the following. And this is a motherhood thing, but everybody talks about what is the CEO's job. And this is why they do, right? This is why they say that it is to build anti-fragility. And you can do it in 2 ways. One, always keep money in the bank. That's exactly the point Ravi is making right now, right? They have money in the bank, which is a safety factor that allows them to be anti-fragile. So that is first and foremost job for the CEOs to make sure the company is well funded, even if their burn rate is very low. And the lower it is, the more room they have to play, the more room they have to make mistakes and survive. And the second one, which is actually a truism that is true for every stage of the startup, is the CEO's real job is actually like the hiring manager for the entire company. Always be hiring the best people, because ultimately you're going to need to decentralize your decision making to a point where it actually becomes its own moat. And you can't do that unless you have a team that is equal to or higher quality than the founding team. So I do think, while small startups have no business really thinking about anti-fragility. It really falls back to the CEO or the founders to keep the bank full and keep hiring the best people, even for general or unclear problem statements. It's very important. And I do think that's the only thing small startups can do. There's really nothing more. You cannot predict how the market will go. You don't have a brand. Most customers, especially in B2B that I operate in ad tech and so forth, they want many layers of validation before they will ever work with you, even if you have a great piece of tech. And so you just need time and you need lots of proof points. And it's sometimes all it takes is great people. Not sometimes, but almost every time all it takes is great people and a lot of money.
Thank you, guys. I think Ravi, Casey, and I think such brilliant points. And when you guys said like the money part about keep money in the bank, I think it reminds me of psychology of money. And there he talks about this. I don't know if it's his own theory or if it's something that he just read somewhere. It's about margin of error. In a way, just save money for the sake of saving. And that circles around like my next question, which was around like just I know we're talking about companies, but how can like individuals, like people like me, you, all of us can be just anti-fragile? I think it comes down to a lot of emotional intelligence, resilience, and all of that. But still, I feel that a lot of people, when chaos arrives, just lose their minds. So just like any piece of advice for that.
I think largely it comes down to the people you believe in. Whenever you take on a mission or anything that you believe in, right? You should, whenever you join a company, any person as a company, as part of the company, you should start believing that it's the cause that really drives you. And then it allows you to be flexible, right? That basically I come with a certain set of skill sets, and if there's a feedback that's given by my co-founder or my friend who is functionally trying to do the same thing, that has to be picked up very fast and implemented fast, learned fast. That becomes really important. I agree to the fact that you cannot take feedback from everyone, but it is functionally when you're building a layer that these functionally put and driven towards the impact or the goal, that the lofty goal set up to solve for. If there's a feedback that's coming from anyway, I should functionally try to incorporate that as soon as possible. The second part comes across from the agility. Small companies, if they are functionally not agile in believing that there can be something they don't know, and they make that pace of innovation really slow in that case, and it can be very nimble steps, very simple step, like putting up, like if somebody knows that one-on-ones are very important in an education setup, so why don't you just put across a Calendly link? You don't need to build a product for that. You just need to know services which can enable you to do that. And then you get faster feedback around that. And then you build some sort of a system layer on top of it. So I think two parts. The first thing is you trust the individuals who are in the team in believing that they're all aligned and the criticism or the feedback that's coming to you is actually adding value to the system. That is one. And secondly, you keep yourself agile on their feedback, whether it's good, whether that's bad, because it keeps your learning accountable and you grow in a much faster way in dimension you don't know. Yeah.
Great, guys. I think we are almost 5 minutes remaining with the closure of the session. I hope Ravi, Shravan, and Casey, you're okay to extend it for 5 minutes.
Absolutely.
So we just want to open it up, and if anybody has any observations or questions, please do raise your hand, or however you do it on Spaces. We'll bring you up, and you can ask your question, make an observation. While that happens, and I will manage that. If there are any questions, there is a point that probably Ravi and Jitha have been discussing on Trader's Joe. Jitha, do you want to double click on that?
Okay, cool. I think it's a good place to actually end the discussion or leave the discussion on people's adaptability and so on. So even in Ravi's article, he talks about Trader Joe's as an example of an anti-fragile retail company. And so the reason why we say there's something there is, so it's a retailer, it's a grocery retailer. In the last 2 years, especially during the first lockdown, all of these retailers had a very hard time. Many shut down, many of them halved the number of stores they have, let go a lot of people and so on. But in that time, Trader Joe's actually recovered very quickly, has posted record profits. It was very interesting to dig in to what goes on with the company. And I've written a blog post about it, so I won't go into that. I'll just give one story, right? Now, the main strategic decision that Trader Joe or Joe Coulomb, the founder of Trader Joe, made 60 years ago was, I will have the highest paid employees in retail. So whatever the salaries are in retail, I will pay higher salaries. I will have the best people. And the result of that is adaptability. Right? I'll give you that one story that fascinated me. So I don't know if in the early part of the lockdown, when everyone panicked, went to the shops near their homes and emptied it of everything, ready to eat noodles, bottles of water, even toilet paper. So all retailers were running out of toilet paper in the US, for example. But Trader Joe's didn't run out of toilet paper because the team there, they actually adapted. Instead of talking to the same guys that they would talk to say, hey, do you have supplies of toilet paper like last month, but I need more, and no one has it. Instead of that, they actually stood back and said, okay, who will have toilet paper that I can buy? And they actually went and called a few hotels who suddenly did not have customers coming in because of lockdowns. Suddenly they're sitting on a lot of inventory of food, everything, but toilet paper as well, that they could do nothing with. So these guys went, spoke to hotels and got the toilet paper from them. And when every retailer was out of simple basic products and staples, these guys were advertising, say, hey, have a hotel-like experience in your home with these toilet paper rolls for 69 cents. That's what human adaptability gives you. That's what decentralized decision making. Ravi, I don't know if there's anything you want to add, but I thought that was a fantastic anecdote.
Yeah, I think that it's a fantastic anecdote. And I think there's even additional things. One of the interesting things that you touched on in the article was that a lot of grocery stores have gone to self-checkout, where you actually have to scan the merchandise yourself, bag it yourself. And so every single item needs a barcode on it so that it can do the scan. But Trader Joe's never added self-checkout. Everyone has to go through one of their cashiers, who's a very well paid cashier, because they want people to have that human experience. They want that ending experience to be something that is adaptable. And one of the reasons they were able to do this thing with the toilet paper, because all of that toilet paper didn't have barcodes because it wasn't packaged for sale, was the toilet paper would get to the cashier and the cashier would just ring it in manually. And so it's a really interesting example of how all of this comes full circle. When you actually count on people to be empowered, you give them autonomy. When you focus on building capacity, including human capacity, rather than the utmost inefficiency, then when these shocks come to the system, you're able to adapt in ways that your competition cannot. And one of the most amazing things about the Trader Joe's story is not only did they achieve record profitability after the pandemic, they never added delivery. So it was said every single grocery company is going to need to add delivery in order to be successful in this new reality. They never did. You have to go to a Trader Joe's store to get a Trader Joe's product, because they want you to be able to communicate with the people in the store, and they want you to have that human experience. So it's just a nice example of how oftentimes by being strategically thoughtful, by going in a way that's different than the rest of the competition, and by enabling every single person on your team to have decentralized authority, you can create a system that's much more adaptable and anti-fragile than other companies, which might be profitable, but are really just on the edge, and any small shock to the system can put them into a position where they're not able to maintain those margins any longer.
So before I get Yogi, Ravi, I just wanted to have a follow-up question on that. So this not having delivery is probably works for a generation like ours. But do you think this is going to work for the younger generation, which is born in the e-commerce boom?
I think it will. I think one of the things that Trader Joe's is very good at is assortment. They get very trendy products. They get them very quickly because their buyers of their products are close to the actual shoppers in their store. And when oat milk becomes popular, they're one of the first to have oat milk. When organic kale becomes popular, they have organic kale. And so they're very much on the trends of what individual shoppers need. They also do focus on cost effectiveness. In the article that Jitha put together, he talks about how Joe from Trader Joe's originally said that he wanted to focus on customers who are overeducated and underpaid. And so he wanted customers that were discriminating in terms of their taste, but were also still price conscious. And I think that does capture a lot of younger consumers, and a lot of younger consumers do have an affinity for Trader Joe's. And so it's not the way a lot of companies would go after that particular demographic, but the way in which they've defined their business does make them relevant both to older consumers as well as to younger consumers.
Great. Hi, Yogi. go ahead with your question.
Hi, Ravi. So my question is for Ravi, basically, and Shravan. So Ravi, there is a basic mindset. I know Casey spoke about hiring the best people, but there is a mindset that everyone is replaceable, and we have seen that in a lot of companies that they hire the best talent, and the people have been advising to the CEOs, especially in the early startups. The CEO has a different mindset of a mindset he would like to, or he or she like to impose their ideas, and the what eventually happen is the good talent or the best talent start leaving the companies. So what is your observation, or what is your thought in that kind of situation, and how would you suggest to mindset of the CEO in that scenarios?
My experience is that a lot of CEOs do feel that way, either explicitly or they get driven to that thinking that everyone is replaceable because they start to think about talent as a commodity. And of course, in these companies, talent is one of the biggest things on the income statement. And so reducing talent costs is a great way to increase your margins. But I think they do so at real long-term jeopardy to themselves for two reasons. Of course, there's the adage that the best talent makes for really good decisions in a company. But I also think today, in a world where people are moving from company to company so quickly, when you have a group of people who can work well together, who's like a band where if you just take one person out, the whole band doesn't play as well. Losing that, not valuing that is a real risk. And especially in these times when people are hybrid and where those relationships really count. And I think companies should be talent focused, not just because that's the right thing to say. Absolutely. I think it's important because of that, but also because there is this hard to quantify, really positive element when you have strong people that have rapport, that work together well, and that have done great things in the past and that believe in the mission. And if you can really tap into that, it gets you to that point where the company is a lot more anti-fragile. If you treat people like a commodity, like cogs in a machine, there's so much opportunity now. There's so many options that people will leave and they'll find somewhere else to be. And I think that is something that makes companies vulnerable if they focus too much on the efficiency around talent and not enough on the quality.
And just adding to what Ravi's point, I think one of the points that I really liked from Ravi's conversation was that it's okay to agree that you might have not hit the holy grail for growth. What really happens for most CEOs, they try to optimize two variables in the delivery net, which is growth and simultaneously scaling the company, right? When your whole mindset is on a belief system that you've already built and you optimize for growth, then the second variable, which is talent as a commodity or whatever, you start thinking on those lines, saying that if I'm not optimizing for growth, and then at that point the company would eventually die. But what you have to initiate, that is why strategic capital allocation becomes a lot value. You don't take as much amount of money on the table as you don't require. I see a lot of companies, a lot of seed stage companies raising huge rounds, but that comes at the point of accountability of the thinking of the CEO that he or she cannot be flexible. And that is how typically it happens. And at that point of time, you go with smaller or macro network effects of what the personality of the individual is or what the background of the individual is, not the mindset. So curation at the mindset level becomes really important of who you are bringing in. And if the person is functionally aligned there, it's okay to be slow at that point. It really doesn't matter. It really doesn't matter. And you figure out the product market fit or whatever you want to build across and then scale. Because as Ravi rightly mentioned, that to get a set of people who are working together well, who believe in the cause, it's very hard. I think it's the hardest problem a CEO has to face initially while building a company. Yeah.
Thank you, both of you.
Thanks, Yogi. We are now out of time. I just wanted to thank all the speakers for coming in and joining. And I would recommend everybody who's listening in to follow them on LinkedIn, Twitter. I think all of them definitely are on Twitter, but also on LinkedIn. And I would probably just get Jitha and Sakshi to just, close it and then we can move ahead.
Great. Thanks, Pritish. Yeah, excellent. I learned a lot in this conversation. Some of those high level patterns that I had in mind, I think I got an opportunity to deepen them a lot more. So thanks, everyone. And I hope all the listeners also felt the same.
Thanks for inviting me. I think it's the lessons that were shared by Ravi, Shravan, and Casey. I'm not super young, but yet I'm just starting out with like job and all of that, and it does give a lot of perspective in terms of how to be more anti-fragile, maybe as a leader, or if I'm into a setup, how to think about things in these terms. So just grateful for all the learnings that you guys have shared. And to all the listeners, these guys write amazing stuff, valuable stuff, insightful stuff. So just follow their blogs, LinkedIn, Twitter. And yeah, those are my final words, Pritish.
Thank you once again, Ravi, Shravan, KC. Hope we can have another session in the future.
Absolutely. It was a pleasure.
Thank you.
All of you guys. Yeah.
Thank you,
It
everyone.
was great. Thank you so much for having us.
Bye-bye.